You're listening to the Full-Time Function Musician Podcast, episode 23.
You're listening to the Full-Time Function Musician Podcast, the number one resource for growing your function musician business. If you're a solo wedding singer, part of a 12-piece luxury show band, or anything in between, and want to learn from other successful musicians, you're in the right place.
You're listening to the Full-Time Function Musician Podcast. I am your host, Jack Twiner. If this is your first time listening, then welcome. If you're a regular listener, then welcome back. This podcast is for function musicians who are looking to grow their business, book more gigs, hear some inspiring stories, and generally just learn from others who've been doing it successfully for years. So a bit of a different episode today, but one I'm super excited about. We are going to be diving into the world of bookkeeping and accounting. Not the sexiest subjects, especially for creators, I think, but something that is super, super important if you want a successful, long-lasting business where you don't get in trouble with the government. I can't stress enough how important it is to take this stuff seriously. But before we get into that, I'm going to ask you again that if you are enjoying this podcast, I would hugely, hugely appreciate it if you could give it a share on Facebook or Instagram or wherever you hang out online. And if you have a subject that you'd like to discuss on the podcast, please get in touch. You can do that by contacting me on Instagram at InFocusRecordingCo or emailing me at feedback@thefulltimefunctionmusicianpodcast.co.uk. Anyways, let's get into the episode. I hope you enjoy my conversation with Kathryn Vincent. You're listening to the Full-Time Function Musician Podcast, and on today's episode, I'm joined by Kathryn Vincent from Long White Cloud Accounting. Kathryn, welcome to the podcast.
Thank you, Jack. Good to be here.
Yeah, I'm super excited about this episode. I've wanted someone like you on the podcast for a while now, and it was actually John Blackburn who introduced us. John's been on the podcast a couple of times now with some great episodes, so thank you to him for that. Just to kick things off then, we'll just tell us a little bit about yourself and what you do.
So I've been an accountant for a long time, decades, and 3 years ago I set up a business on my own, and we focus on bookkeeping for companies. So we provide a virtual finance department and generally help businesses grow and support entrepreneurs who are going out on their own and things like that.
Mm-hmm. So, first question, bookkeeping, is that just sort of like you're in charge of keeping the accounts throughout the year rather than just doing a tax return at the end of the year?
Yeah, so you're a traditional accountant, especially when you're really small and maybe just beginning, just setting out, you go to an accountant once a year and they fill out your tax return. So
Yep.
You've got a self-assessment tax return. That doesn't really float my boat. I'm not interested in just seeing people once a year, and actually I've niched down to what I want to do in my business, which is supporting established companies throughout the year with all of their systems and making sure they're on the right technology and making sure at the end of every month that they actually know their numbers and understand them.
Okay, yeah, makes sense. Do you still do people's tax returns at the end of the year as well, or is it just like one whole package included?
No, it's not on my license. I'm that disinterested in just checking the box for HMRC and filling out the tax return. So we actually have subcontractors, and I outsource that section of the work.
Nice. Okay.
Or people normally have their own. What happens is people have their own accountants at the beginning of their journey, and they might change into a company or growing a company, and then they keep their accountant to do their tax returns, but they bring in us to be their bookkeepers throughout the year to really hold their hand. We're a very high touch personal service.
Okay.
So we tend to be in their businesses every week once they've grown to a size that requires that.
Yeah. My wife may want to talk to you after this, actually, so I'll maybe put you in touch. Anyway, that's a side note. That's where to start. I thought we could start with limited companies versus sole traders for musicians and bands. The difference is what might be better for each sort of person.
Yeah. So sole traders, you've got your person. It's a legal kind of setup, right? With a sole trader, you are the business and you're personally responsible for everything. So that is the standard when setting up. And it's the status quo and everything. But sometimes I like to challenge the status quo. So the norm is setting up as a sole trader. but there's no legal separation between you and the business. The financial admin is much more simple. That's a big advantage. There's pros and cons of being a sole trader or a company, right? So you're a sole trader, you are the business, there's no legal separation, and you're keeping, it's all your money, so you're taking drawings and everything, and basically everything goes on your self-assessment tax return. And then if you're a limited company, which might not be that applicable to your industry, because sometimes you need to legally separate yourself if you're in a high risk kind of business. But when you grow and you want to be more, set up and developed, and maybe it's a lot about what you look like to people. It depends who your customers are and who your clients are going to be. So who are you contracting with? Some people like to contract with a limited company. And the main advantage is the business, which is your company, as a separate legal entity, and you turn into a director and a shareholder of that company. There's lots more finance admin involved. That's why we help out companies. And there's a few more finance costs and things. And VAT registration is a different thing. People think you need to be a company to be VAT registered, but actually you can be any kind of business structure. VAT registration kicks in mandatory when you hit a certain turnover. So if you're running a limited company, if you decide to go that route, and it all depends on your individual circumstances and your business, then you're a director, you take a director's salary, it's PAYE, you're an employee as the director, and you need to file annual accounts and corporation tax returns for the company, as well as having your own self-assessment tax return. So it's quite a whole different kettle of fish. Yeah. But it's really good to talk to somebody who you get along with and who you can trust about your individual circumstances, and even at the beginning, get some proper advice around what business structure would suit you and your circumstances and your business. Yeah.
I'm a limited company. My business is a limited company, and purely for the reason when I first started it quite a few years ago now, I was just Googling, and it just sort of seemed to be the best one, but it was confusing figuring out all the sort of financial admin things around it. But now that I've got all that sort of covered, I feel like it runs really easily. And do you think it's possible? Is it easy to switch from sole trader to limited company, or is that quite a annoying process?
It doesn't need to be too complicated, depending on what you're doing. I mean, in my circumstances, I spent the first year of my business as a sole trader, and then got to learn about limited companies much more, because I'd never run a business. I'd always been in the business, employed in a big finance department. So for me personally, it was a bit tricky, because I had to move insurances, licenses, supervision, ICO registration over. And now I have an accountant to do my year-end tax returns. Yeah. So she does annual accounts, corporation tax, all the company's house kind of stuff. Yeah. So the thing is that I believe that you should set up as you mean to go on. Yeah. So I kick myself that I didn't start as a limited company from the beginning and got a practice license and a professional body membership and all that. I don't know exactly what registrations you need when you're a function musician, a full-time function musician, but at the bare level, it's insurances. Yeah. So you would be insured as the sole trader, and then if you switch to a limited company, the company is insured, kind of thing. So, and I just believe, depending on who your audience is and who your clients are, it makes you look more like a growing up business in lots of ways. Your it adds into your social proof and everything as you grow. I'm here, I'm serious, I'm doing this full time, and I'm a limited company, and I'm here to stay, and you can kind of trust me a bit more, perhaps.
Yeah, that makes sense.
Yeah.
So it sounds like then, so for if you're a sort of solo musician, you're a wedding singer or something like that, it sounds like it would be best off to start as a sole trader. But there's the other kind of people who listen to this that are in bands. They may be a band leader. So it's their band. They're sort of essentially like the managing director of the band. And then they employ musicians to be in that band. And that might be different musicians for different gigs or that. Would you say that was probably better to be set up as a limited company?
Yeah, perhaps. So are you employing the people or are you subcontracting to them? They're probably more
subcontracting,
freelance contractors, yeah. So we have got a client in the creative industry and he has subcontractor freelancers. And his contracts are between the limited company and the freelancers. Mm-hmm. And there's a bit of added kind of protection there. And for me personally, I'm quite risk adverse naturally. So I would tend to go the limited company way. Mm-hmm. But what you need to find is an accountant who knows your industry and who has done this dozens of times and knows the pros and cons of the business structures that would suit you best. And it's not just about what you look like and what suits your business. It's about your individual circumstances. So what we hear about is people going for a mortgage, but they've drawn a tiny director salary from their limited company for tax reasons, and the mortgage isn't so straightforward as being a sole trader. Yeah, because your income might not look as favourable. So there's so many moving parts to what business structure you should be set up as and trading through. Yeah, it's a huge puzzle, to be honest.
Yeah. Basically, the answer is you need to speak to a professional one-on-one.
Yeah, you really do. I really highly recommend that. Yeah. It's like a lot of things, but there's lots of professionals out there. And if you can find someone that knows your industry, that would be the best person. You also, the second thing that I would say is you need to be able to communicate with them. You need to like that person and trust them. They need to be responsive. You need to be able to ask them questions and for them to give you a great response that you can trust and that you get in a timely manner, really. Yeah.
So that kind of brings me on to this question then. Is when is the best time to start thinking about getting an accountant? And I guess that's at the very start, right? But I think a lot of people will just figure it out and do their own tax returns for quite a long time, at the start, at least.
Yeah, I think that is the status quo, to just go along. There's a Facebook group that says, I need help with doing my own self-assessment tax return, and you ask in there. There's lots of there's a few benefits to that. It will be cheaper, but there's lots of disadvantages to doing that. So even if you're the tiniest sole trader, it's just you, are you sure that you're claiming everything through your self-assessment tax return? Are you sure that you're picking up all your expenses? Because, you're at the beginning, you want to pay as less tax as possible. That's one piece of the puzzle, isn't it? So you've tracked all your income, but all the expenses that you take off to get your profit to pay your tax, are you sure you're capturing all the expenses you're entitled to? And the flip side, are you sure you're not putting in a whole lot of stuff that HMRC would not allow if they looked at your tax return? So, yes, you're right. At the very beginning, talk to somebody. It could be a one-off conversation to just put your mind at ease that you're starting off correctly. But ultimately, you want somebody professional to be doing all of your tax returns to check that you've captured everything correctly. Is everything in there? And everything that's in there, should it be there? I think that's the basics at the beginning.
I mean, getting an accountant for me was one of the best things I ever did, just for the stress levels of when I came around to doing corporation tax returns was just take me 3 hours, and I was so stressful. So handing that off to a professional was the best thing. And I swear he's saved me more money than I've paid him at this point.
Yeah. It's more often the case that it's beneficial, cost-benefit analysis. The cost of paying for an accountant outweighs the benefits that you receive. Yeah. And even me, I didn't even attempt to do our own company corporation tax return because I honestly believe that my time is spent doing what I know and what I should be focusing on, rather than spending a day trying to work it out and not be 100% confident that it's correct.
Yeah. So we mentioned VAT a little bit earlier, and is it a benefit to be VAT registered? I know you said it's mandatory at a certain level of income, but do you recommend it before then?
Yeah, sometimes. For me, I went VAT registered from the beginning of trading as a company because the people who are my clients, who I'm charging, they are all VAT registered companies. So for them, they're not out of pocket, are they? So I'm charging £100 plus VAT a month to somebody. They're VAT registered, so they're going to claim it back. So it's no difference to my clients who are VAT registered as well. There's no difference in cost to them whether I'm VAT registered or not. Now, if you haven't reached the mandatory threshold, which is now £90,000 turnover in any 12-month period, and we can talk about that a bit more. If you haven't reached a threshold and it's not mandatory to be VAT registered, and the people that you are charging, that you're invoicing, are not VAT registered themselves, they're just normal people, they're a couple getting married, they're paying out of their personal finances, you might have a bit of a competitive disadvantage. Because
you have to charge more. You have to charge that VAT on top, right?
You have to charge 20% more of what they're going to be paying you. So if you're worried about competitors who are not VAT registered undercutting your prices, and it shouldn't really be on price what these people getting married, whether they're choosing you or not, it shouldn't be all based on price. But quite often that's near the front of people's minds. So if this couple getting married, they're looking for a wedding singer, they go and get 5 quotes from people and they're focused on the price, they're really price sensitive, and you're VAT registered, your prices are going to be ultimately 20% more than the other 5 people, sole trader, not VAT registered people, they're getting prices from. So, there's pros and cons, but you've got to look at your expenses as well. So your income, VAT, you're putting 20% on top of your prices and your clients are paying you that. If your expenses have a whole lot of VAT on them as well, then if you are VAT registered, you're claiming back 20% of all those costs that you've paid out. So that's a major advantage, isn't it? If you are VAT registered, then you can claim back all the VAT on your expenses as well. And that helps your cash flow and it increases your profit quite a lot as well. Does that make sense? Because I've run through that quite quick. Do you want to ask specifics on that or do an example?
Yeah, let's do an example if you have one.
Okay. So if you are under the mandatory limit, there's no two ways. If you turn over, that means if you make sales worth £90,000 in any 12-month period, you have to be VAT registered. So be sure to track your sales. Now, if you're under the mandatory level and you decide to be VAT registered, then there are advantages and disadvantages. So one of the big advantages is that you can claim back all of the VAT you've paid out on your expenses. So say you're paying for an accounting software subscription and that's got 20% on it. Well, if you were VAT registered, that's now going to be cheaper for you because you're claiming 20% of the price. If you're not VAT registered, your business is picking up the whole amount, including the VAT of all your expenses that you pay out. Okay, so
and like for equipment, like say you're saying you buy a microphone and a loudspeaker and stuff that will have VAT on it, you get that back as well.
That's right.
So does that come back at like one lump sum at the end of the year then, or?
No, so normally you'll be putting in your VAT returns every 3 months.
Mm-hmm.
So say, where are we now? January, February, March is the last normal quarter that we're finished. So what are your sales? You need to take off 20% of all of those sales. and pay it over to HMRC each quarter. But what gets deducted from that total that you pay over to HMRC is the VAT portion of all the expenses that you've paid out in that quarter. And there's different VAT schemes. Some is based on the cash you pay out. And it gets quite complicated, which is where somebody like us comes in to actually do your VAT returns for you. But in essence, what sales have you made in the 3-month period? What's the VAT on those sales? And what expenses have you paid out in the same 3-month period? What's the VAT on those expenses? You take the VAT on the sales less the VAT on the expenses, and that's what you need to pay to HMRC.
Right. Okay. Yeah, that makes sense.
And so it's a 3-month kind of cycle usually.
So it's definitely more complicated to do it if but there is benefits, it sounds like.
Yes, it's a whole step up in your whole financial admin of your business. But depending on what your expenses are and how much VAT there are, it was a no-brainer for me personally because I pay a lot of VAT on my expenses. And think about if you're freelance or subcontractors, if they happen to be VAT registered as well, which happened in my case, some of my team are VAT registered contractors, then you get back 20% of all their costs.
Yeah.
You can claim that back. So it does get a bit tricky. There's all kinds of rules. There's reverse charge if people are charging you from outside of England, and you have to, and the really big thing is you have to have the correct paperwork. And by paperwork, I mean tax invoices showing that you've paid VAT to your suppliers. And those tax invoices are made out to your business name and clearly show the VAT that you're claiming back. It can be quite an involved, complex process for a bigger business, and even a smaller business. You need to know what you're doing to do it correctly.
Yeah. Or have an expert do it.
Yeah.
Cool. Yeah, I think that's enough VAT for the minute.
Yeah, it gets a bit tedious after a while, to be honest.
So where should we move on to next? I guess some other questions that I've got are there any recommended softwares you used or recommend using for people that are going to do it themselves? My wife just uses an Excel spreadsheet. That stresses me out a little bit. And I know people use, what's the famous one?
QuickBooks or Xero?
Yeah, QuickBooks. Yeah. I tried that for a while. I didn't get on with it personally. So I use Wave apps, but that is now currently not available in the UK. If you're signing up for it now, I was lucky enough to get in there before. I find that one quite good, but obviously that's not useful now. Any others?
So if you're a small sole trader, I've heard Free Agent is very good. Have you heard of Free Agent?
No, I've not heard of that one.
I think it comes free with some type of bank accounts.
Okay.
But the number one thing is using software. I'm a massive software advocate and lover. So if you're on loads of people used to be on spreadsheets, right?
Yeah.
And then if you're VAT registered, this whole MTD thing came in, Making Tax Digital. So they were VAT registered, they were working off spreadsheets, but then they needed to change to software because all the electronic links for your VAT return needed to go through software. And also there's massive problems with spreadsheets. If they get too big and complex, one person can delete something or a formula can go wrong and the whole thing kind of can fall over very fast. I've seen it happen. So always start with software. The software can be a free version of something and it can be very basic, but it means that there's less human error happening, and it means that you can keep it up to date very easily. It should always be up to date. So say if you're making a decision about hiring a staff member and your software is up to date, you can use those numbers in there to aid your decision and things. We personally use Xero, so we're a Xero-only accounting practice because that's what we specialise in and that's what we're expert in. And Xero is good for any kind of size business, but especially when you're up and running with maybe a couple of 100,000 turnover, and it goes right up to millions of turnover. And when you get bigger, you want things to integrate. So you've got a booking system on one side and your accounting system on the other, and you want it to be able to integrate and capture all the income from the bookings and online payments and all that kind of thing. So that's another major advantage of using software, is the integrations and the automations that are available.
Yeah, makes sense. I guess it's time to move on to financial goals and why it's good to have financial goals.
Yeah. So, you love doing this thing. You love playing music and entertaining people and getting really good feedback and building up your business. And it's a good challenge, and that's your craft. Like, that is your craft and your passion to basically play music, for example. And that's the focus. But you've set up a business to be able to carry out your passion, but you need to be able to live as well. So you want to have a certain lifestyle. And let's face it, we all need to earn money and make a profit when we're in business. So we set up a business 99% of the time to make a profit, to fund our lifestyle that we want to live. Our lifestyle could be buying a house, going on holiday, being able to eat out twice a week and have a certain level of standard of living. So if you don't think about the financial goal of your business, it's very easy to get carried away. And I've personally done this as well. I'm just so passionate about helping other people in their businesses. You can easily lose sight of the goal. So you always need somebody to talk to you about that, or you always need to be thinking about that end goal of why you're in business and to keep it in mind. So this is why I'm a big advocate of monthly reporting and monthly knowing your numbers. So it's no use waiting to the end of the year to see if you've hit your financial goals, to see if your business is actually working out for you, if it's a viable kind of business setup and structure. Every month you want to be keeping your numbers up to date and looking at them and seeing if they're tracking the right trajectory. So when we first set up, it can even take a couple of years, a few years to get going properly. But you need to keep an eye on the numbers and make sure that you're doing the right things to get to those financial goals that you've set yourself.
I guess it can help you. So for me personally, anyways, I'll be looking at my numbers like halfway through the month, and I'm like, I need some more money coming in this month. So it'll push you to be like, okay, I need to make some calls, I need to get some more gigs or whatever it is, as well. And that's how I find it helpful, definitely.
Yeah, so it all starts with the sales, and I've been in some great groups around sales, and you're right, the calendar month just doesn't stop. You shouldn't wait to get to the end of the month to see if you hit your sales target. So if you know you need to make 5K worth of sales every month, and that's quite large for some people, but say you've got a small team, and you need to sell £5,000 worth every month, then you're right. After the first week, if you haven't done anything, you need to up your game and follow up all those leads and prospects and really make some calls and contact some people, or think about your marketing strategy some more. So yeah, that is the number one number. You're correct, is the sales, because everything flows from that, doesn't it?
Yeah, absolutely. So profit margins, that's next on the list. That sort of comes from that, right? Yes.
So it's no use making 5K worth of sales in the month if your expenses are going to be £7,000 every month, because your profit margin is negative. And you really need to be tracking your expenses and keeping them in check. It's very easy to overspend because there's all the latest things out there and the next shiny thing, and getting the subscription to this additional piece of software might not be the best idea if you can't afford it. So, and also we also want to have a team and having them doing all of the stuff. But if you can't afford it and it's going to make your profit margin negative or even too small to be a viable business, then you really can't, you have to double check whether that's the right decision for you. So a profit margin is your sales less your expenses. And your profit margin, depending on what your expenses are and what your business is, always needs to be positive, because you need that business to make you profit, to reach your financial goals and have the life that you want to kind of lead.
Yeah, I mean, for me, I sort of count into my monthly what I need to make every month. I've got little pots in that are for equipment and things like that. So that sort of savings goes up. And then when I want to buy some new lights or something, I'm like, cool, I've got enough in my little pot there to do that.
Yeah, so you want to set some cash aside for that kind of thing, because depending on your business, you want to keep upgrading and replacing old equipment so that you're providing the best kind of service to who you're playing to and everything. And there's always going to be replacement costs and things, and you're going to be upgrading and adding to your equipment. And you also want to keep aside money for taxes and things. So you don't want to go along throughout the year thinking, oh, yep, sales less your expenses you can see as your profit, and then suddenly have a tax return or have to pay literally tens of thousands worth of money in tax to HMRC and not have the cash set aside in the pot. In some bank accounts, Starling's a good one, they have these saving spaces, and you can call them what you want and set aside what you want. And you might have one for equipment, because you always want to be able to afford to have the latest, well, not the latest and greatest equipment, but a certain level to your standard. And you can have another pot for tax and another pot to save up to get some help with some, one of the very first things is getting some admin help, perhaps, to run a website or some social media kind of thing. So yeah, you're right. Savings pots are great. It's a great idea.
So break even. What is break even?
So if you have your numbers on some software especially, and they're all up to date and you can rely on them and you're not fibbing yourself and you're being realistic, then you can calculate your break even point and analyze it. So that's about understanding the financial viability of your business. Are you running a business that is bringing in enough income to cover your costs? And the costs don't need to be elaborate and everything you want straight away, but you will have costs because you are running a business and you want to, it's all costly, isn't it? So it tells you how much revenue you will need to generate to cover your costs and to start making that profit. And you might not make a profit in the very first beginning because there's a lot of setup costs perhaps. Mm-hmm. But you always want to keep an eye on the break-even point. And the lower that your break-even point is, the lower the revenue needed to cover your costs to make a profit, the more comfortable you'll become. And so you want to feel like you know how to make enough sales and bring in the income to cover all the costs, to keep increasing that profit and that bottom line. So the break-even point is when you bring in enough cost to cover all your expenses and you are break-even with your profit. Don't forget to include in the expenses with this kind of analysis enough money for yourself.
Yeah, that was going to be my next question. Do you include that your pay in that as well?
Yeah, so it depends which way you're looking at it. If you're a company, you want to make enough profit to take enough dividends. You might have salary in the expenses. Every business is different. But say, for example, you're a sole trader and you've got a very simple setup and simple business structure. So your sales less your expenses, including how much you need to take out of the business, include that in your expenses to make, to get the break even nil amount at the bottom. And you need to be realistic, I think, with how much your business needs to earn. You don't want to be so miserable and not being able to cover your costs of living that you kind of start to kind of regret it and think, oh, it's all too hard. You need to be realistic. I mean, you can live cheaply for a while you get the business up and running, because this is your long-term project. I think of my company as a longer-term project. I've got kids, and by the time they're older and more self-sufficient, it should be really a well-run oiled machine making a good profit. At the moment, I'm 3 years in and I still feel like I'm starting up. So I don't need to take a huge amount at the moment because of my individual circumstances. But if you're by yourself paying rent and everything, you need a certain level. So make sure you include a realistic amount that you can live off while running your own business, I suppose.
No, yeah, that's great advice. So cash flow is something that, it sounds like it's simple, but I feel like it's actually more complicated than just the money coming in and going out, right?
Yeah. So this has a good bearing on if you actually survive. And it sounds quite kind of negative, but businesses actually fail because they run out of cash. So what do I mean by that? If you don't have enough cash to cover your costs and the things that you have to pay out, then you're going to become an insolvent kind of thing and not be able to keep operating. But if you're invoicing your customers, your clients, and they are not paying for your invoices, then you haven't got enough money to pay out those expenses, because normally the expenses come before the money comes in, right? So if you're doing an event and you're paying out a whole lot of expenses, but you haven't had any money coming in for that, then you're in negative cash. And of course, you want to be doing deposits, and you want really strong contracts that say 50% or even more of the deposit is due on booking, so you can allocate out that time in your schedule and stuff. And then the other 50% is due on the day. So you want to get all that cash coming into your business as soon as you possibly can. And there'll be industry norms, and I talked about this. I was doing a YouTube recording on the weekend. There'll be industry norms about how people in your industry pay, but you are entitled to challenge those norms, and it's your business and you run it. So, in America, I know they have 60-day payment terms, and that's standard, but that wouldn't work for my company, and that wouldn't work over here, kind of thing. So it wouldn't pay to get all the expenses and do all of the event or the function, and then have a customer paying you 60 days down the line for that event, for that work. So just be careful about the timings. And of course, with cash timings, coming back to the tax piece. So we're all probably going to be paying income tax, right? On our income. If we're making a profit, we need to pay that tax. And that gets paid. Sometimes we have payments on account every 3 months, but sometimes when we're starting, we get a tax bill at the end of the year and it's due, and it's a huge lump. So don't spend the cash, because that cash actually belongs to HMRC. Put it aside in a different savings pot and set it aside. And VAT cash is very important as well. So cash flow. Everybody needs positive cash flow to be able to be in business. And the bigger you get, the more complicated it can be. But basically you want to try and, you have to keep the more cash coming in than is going out. And it's all timings. And there's some great cash flow software out there. But in this case, you might actually want to use a spreadsheet for cash flow and have a month and have the dates and put along the top when you expect the cash to come in or when you know it's coming in, and put along the bottom all the cash that's going out, and make sure the bottom line, the difference between those two on any given day, keeps in a positive balance.
So I think in this industry, as in function musicians, it seems to be the norm that they don't take deposits. This is just, maybe I'm wrong, but this is from what I've seen online and talking to people. They don't take deposits, and then the venue cancels on the day, and then they don't get any money. can you start asking for 50% deposits, 20% deposits? I mean, for me personally, nothing goes in my calendar without a 50% deposit. And I just feel like that should be the same everywhere. But
it really should be the same. So I imagine how much effort and time you've gone to and how much lost opportunity if somebody cancels on you on the day, let alone a week before. So you've blocked out your calendar. You can't accept any more bookings on that particular weekend because you're committed, but you haven't had a deposit and you haven't had any financial benefit. And then they cancel or something happens or they never pay you. And the opportunity cost of that is massive. You could have had a more profitable, bigger event on that date that you got a 50% deposit for. And, you wouldn't be out of pocket if they cancelled. The contracting and the clauses and the terms and conditions need to be nice and solid around that.
Yeah. Maybe people can start changing that norm. But I know there are contracts in place with a lot of musicians and venues as well, so that they do get covered that way. But it doesn't make sense to me to not have a deposit.
It's entirely up to you to challenge that norm and challenge the status quo. It's your business. And you are allowed to set the standards and set the rules.
So I think we missed out our 7 crucial numbers.
So the 7 crucial numbers that you need to know in any business, no matter how big you are. Number 1 is your sales, because everything flows down from your sales. They are the lifeblood of your business. So without sales, you have no business. And without cash, you have no business as well. So track those. And all the time, as much as you possibly can. And what are you tracking them against? You need to have some kind of target to be able to check against if you're on target or if you need to change something.
Is that monthly? Personally, I do monthly, quarterly, and yearly targets.
It could be as little as weekly.
Okay.
Depending on what suits you and what you need to track. Monthly is good because it's nice, clean calendar months, and it's nice to split an annual target down into 12. But monthly, weekly, monthly, quarterly, as much as you possibly can. Something that's maintainable, though. I mean, let's not get silly and say every day I'm going to spend an hour looking at my sales. You need to be able to maintain it. And then, so the second crucial number is profit margins. There's a gross profit margin and net profit margins, and it's all about fixed costs and overheads and everything. So you can do a lot of analysis on this. You could spend all day looking at your profit margins, but the most important thing is that they're measuring the financial health of your business, and they tell you how much profit you're going to make on each sale. So if you know that you are at a 70% profit margin. Oh, that's really good, isn't it? Say you're on the 30% profit margin. Every sale you make, you're going to make 30% of that sale is going to be your profit. And of course, your profit margin needs to be over 0, and the higher it is, the better it is. So have a look at your numbers and calculate that. The profit margin comes from the total sale less the total expenses in the rawest terms. And the most.
Yeah. How do, if for like service providers who don't necessarily have like expenses and you need to buy stuff, well, because you've already bought all of your equipment, you've got all of that. Maybe there's some petrol costs to get to a gig or something. But does that mean that you don't have that all of that is profit? Or
well, when you buy some equipment, it gets depreciated, doesn't it, over the life? So if you buy a piece of equipment that's only going to last a year and then you need to replace it, you get the cost of that equipment and divide it by 12, very in simple terms. Most stuff might last about 5 years. So if you buy a laptop, depending on how picky you are about replacing it and keeping it up to date, you'd spread the cost of that laptop over 5 years, so 60 months. So each month you should have an allocation of how much of your fixed assets you're using or equipment that you're using up.
Okay, yeah.
And that goes into your expenses to see sales less expenses. What is the profit margin on each sale?
Yeah, that makes sense.
Yeah, it can be as simple or as complex as you kind of need it to be. I'd say. So number 3 out of the 7 crucial numbers is stock. And Would you guys have any stock in your industry? I wouldn't say so.
Don't think so.
No. So it's more like if you're a shop or a retail kind of thing. Number 4 is break even. So we talked a little bit about that. What is your break even number? How many sales do you need to make over a certain time to cover all of your costs to break even? And the costs include paying yourself a decent amount.
Yeah.
Number 1, 2, 3, 4, 5 is cash flow. Number 5 is cash flow. So that's the most important financial indicator of your business. You need the cash coming in to be more than the cash going out and to keep a positive cash flow to be able to pay your expenses as they fall due. Otherwise, you're in trouble. And I think something's going wrong. You need to have a look at what you're doing. Are you getting in cash fast enough from the sales? Are you charging a deposit up front? Are you chasing everybody who owes you money? Some people leave it and some people have no idea that they've got a huge amount, several £1,000s that people owe them. But that is not a good business practice, is it?
Yeah.
Right, financial goal. So we all set up in business ultimately to make a profit most of the time. And what is the financial goal for you specifically? Are you wanting to show a certain number of earnings to get a mortgage to buy a house? Or do you want to go on a holiday each year? And how much do you need to live, basically? What is your financial goal? Starting at the minimum and maybe adding in levels for as far as you want to take it. Number 7 is staff costs. So we can have a team made up of employees, contractors, freelancers. And, if you don't want to be doing everything yourself anymore, which most of us don't, then you're going to have some costs for staff and for your team members to delegate some of the work, and also in the band to actually bring them in to make your band up. So it's very important to keep an eye on those costs and have an idea of you're here now, but in 6 months or a year, you want to be here, and the likely costs of that are going to be this. Because then you can keep an eye on how much you're charging to cover all those costs, and you can plan for that eventuality.
Perfect.
Yeah. Be aware if you're employing somebody, you're going to be responsible for all their national insurance and pension contributions and their training and stuff in there and all their equipment. So freelance compared to employing people are quite different.
Yeah.
They've got quite different costs.
Yeah. I mean, I think most people in this industry would be using freelancers rather than hiring people, I would imagine anyway.
Yeah.
Cool. I mean, that kind of sums up nicely everything we've talked about, I think.
Yeah.
So is there anything else that we haven't discussed that you think we should discuss?
Not really. Just try and seek, professional advice as soon as you possibly can, as soon as you're thinking about setting up a business as the ultimate goal.
Yeah.
And the bigger you get and the more successful you are and the more closer to your goals you are, then, you're going to need more and more of that support. And it's good to find somebody that you can work closely with and that you trust and that you like.
Yeah. I think a lot of people have a view of accountants as quite professional and people in suits of big offices and things like that. But I know for example, my accountant, for example, is quite relaxed and he'll just WhatsApp me asking questions and keep it quite on a level, which I find really good for me. It's not too serious, if you know what I mean.
Yeah, so you need to have a personality match. And the traditional view, let's face it, is stale, pale males, and they're in suits and they're not approachable, and you're kind of a little bit scared of getting told off by them, perhaps.
Yeah.
But I mean, that's old school, and that's what we call dinosaur accountants in our industry. These days, it's more kind of online, virtual, if you like, that kind of thing. And there's nothing set in stone. You can find an accountant or a bookkeeper that suits you and your business. And it's great to get somebody who knows your industry and business, or it might be location based. So you want to be able to have a face-to-face meeting every quarter to look at your numbers and sit down with someone on a personal level and look at a whole holistic approach of your business and how it suits your life and in all kinds of things. There's all kinds of different layers and all kinds of different people around.
The important thing is that this stuff is super important. You don't want to get in trouble, so get a professional to do it. I think that ends nicely. So if people did want to get in touch with you and ask any advice, where would you want to send them?
Yes, so our website is longwhitecloud.co.uk, and we're based down South London in Sutton, but we cover the whole of the UK, especially the Greater London area. And we provide the bookkeeping in-year kind of finance department, a virtual finance department.
Amazing.
For your company.
Well, thank you so much for coming on and having a chat. I think there's so much useful stuff in here that hopefully will push people to, take this stuff more seriously at least. So thank you so much for coming on and having a chat.
Great. Thank you, Jack.
So there we go. I hope you enjoyed our conversation and learned something as well. I love these kind of episodes where you can really get some solid advice to take away. And let me know what you thought and if it helped at all in any way. That's it for this one. Take it easy, and I'll catch you next week for episode 24.